Well, g'day there everybody. Welcome along to the first video market update for 2019. Today's date is Wednesday the 2nd. I wanted to propose to you obviously just what is happening in regard to this correction that we have been in since the very early period of October on the industrial average. It does differ a little bit for other markets that we look at, but the process, or at least the time frame that we are looking at, is roughly 3 months at the moment. I think it is very compelling and important to point out just where we have traded back on into, and the golden rule, in my opinion, when it comes to trend following and also swing trading. Now, what I'd like to do for you is actually start with the Russell 2000. This is something that we spoke about in Pro over the past 2 weeks. We've really touched on that of decelerating fan lines and also the primary trend lines of the market itself. And the Russell 2000, the chart here, you can see in the top left-hand corner of my screen, this is going out on a monthly time frame, really illustrates quite nicely what we are dealing with and what we're looking at as we begin the calendar year of 2019. 1, 2, 3, and 4, these are the decelerating fan lines of the bull market, which we have been in since the month of March 2009. And what is very important to point out is if you pay attention back on down to fan line or decelerating fan line number 4, this is the last resort for the market. I mean, this is the final bullish trend line, which is holding up this macro expansion that we have been in now for more or less 10 years. So as you can see on my screen, zooming in, this is still the monthly chart. You can see that we have a series of dark candlesticks, some of which are Morobozus. One other here, dating back 2 months ago now, is that of a large wave spinning top candlestick. But you can see most importantly on the monthly time frame that the candle itself of December, it has set up that of a long lower wick. I mean, it's not best really illustrated on the monthly time frame. It is better shown on that of the weekly time frame. But really what you want to pay attention to is, well, is price action holding above this fourth decelerating fan line? Understanding that decelerating fan lines, they generally operate in groups of 3. Some of the markets are operating in their sort of third respective fan line. The Russell 2000 has got a 4th fan line, which is quite interesting, again dating back a couple of years ago, which is really where this extension of support is projected into the future, which we are currently sort of interacting with at the moment. But really the simple rule is, again, a trend is assumed to be in effect until it gives us definitive signals that it has reversed. And a lot of people, once again, are calling for some form of a neckline collectively across all of the US financial markets. And at this current juncture anyway, I find myself in the minority to an extent. And I mean, I say that respectfully, but generally these types of movements, after say 22-23% correction in the Russell 2000, the bounce that we have established right around this 4th decelerating fan line with support holding, generally what will happen is we will continue that of the bullish macro trend. And I think at the moment a lot of people are still relatively pessimistic on the market. They don't really have high expectations for 2019, but in terms of the correction and generally where that of a bull market continuation would begin from, this is exactly more or less that location, right? You can see on the Russell 2000, 1,349. This isn't the closing prices at Wednesday. We still have a couple of minutes left in the session, but I just wanted to point that out to you because, again, the Russell 2000, I believe, is the weakest of really the 5 markets if you want to include the transportational average, along with the S&P, the industrial average, and the NASDAQ. And again, I just wanted to show you a similar chart. Pardon me, actually, before I do that, let me just change into the weekly chart because I want to show you the composition of the actual candlestick on the weekly time frame. Again, you can see that we've had a continuation of sell signals on the monthly candlesticks. However, 2 weeks ago, we started to see that reversal. It was looking as though intra-session during the Christmas week, but that we were actually going to break down below this area. However, if I zoom out long enough and get enough perspective and time on this, you can see again going all the way back to 2009, we have come on back down and retested this 4th decelerating fan line. We're doing it now, I believe, for the 3rd occasion since 2009. And although it's not enough to suggest that we do have a definitive reversal, we are certainly providing that of support, structural support at this trend line for the market. And again, you want to trade in the direction of the trend until we have definitive signals that it has reversed. That definitive signal will come from a break, a close, and a continuation blow, essentially the week, or at least 2 weeks ago now. If we see price action just completely capitulate below this level, well, then we're going to have serious discussions about, the health of the market for 2019. But at the moment, as most people, at least the majority, is still relatively pessimistic and a little bit scarred from the sell-off, which has lasted for 3 months now, I think the institutional or smart money investors are positioning themselves for a pretty healthy 2019. It may not be for the entirety of 2019, but at least certainly if we do see traction off from this area, it may hold on for the majority of 2019, which is going to set up a lot of fantastic trades. Now, if I go into the Dow Jones Transportation Average, you can see a similar type of scenario. Again, this is the weekly chart. I might begin on the monthly just to show you this. Going all the way back to 2009, you can see in the bottom left-hand corner of my screen, this is where the bull market has at least set up from and continued off from. But what is most important about this is that once again, we've got 1, 2, 3, 4. This is now the 5th test, all right, of this decelerating fan line. Zooming back on in, we've got that long lower wick right off from that rising trend line. So again, it is holding up as at the current juncture. We have a little bit of a spinning top at the moment. Obviously, we've got no trading data whatsoever really to work with on the monthly time frame. But even when I take it in a fractal and go into the monthly, you can begin to see potentially that of a sort of a Morningstar reversal, 3 weekly candlestick reversal pattern. I'm not going to go out on a limb and call it, or at least specify that that is exactly what it is. But it's going to be interesting to see whether or not these markets, again, can hold these areas. If we do see that of a little bit of a pullback, which is what we speculated upon over the weekend, prior to seeing the neckline develop and setting up some form of a move like this. It makes a lot of sense if you look at the oscillators again, whether it's on the weekly time frame, you can see just how oversold we are. And even if you want to go into the daily time frame as well, the oscillators are starting to flick to the upside. Now, I understand at the same time, and also most importantly, that MACD is also about to push into neutral territory as well. So you can see the signal line moving up very quickly above that of the slow line as well. And we're starting to get, or very close to getting, that of a positive print on the histogram bar as well. Now, I understand the conversation at the moment is going to be, and I've warned a lot of people about this conversation, and really at this particular time, not to necessarily buy into it. First of all, you're going to hear people talking about the cross, the 100 and the 200, or at least the 100 crossing below the 200. We've seen this happen in the past a couple of times. In and of itself, it isn't a macro sell signal. Not yet. We need to see more information develop. But what I think is going to be more pertinent and what is going to sort of linger for a lot longer is going to be that of the backline retest of some of these macro support areas for 2018. If I go back out into, all right, some of these weekly charts or even the monthly charts, which I might do as well, we certainly have a pivot around here, and we are certainly below it as well. I mean, whether you want to take it at 9,500 on the transportational average, or if you want to drop it down to 9,300, you can see technically we are still below these pivots. And really what's going to happen, the conversation at least, is going to be, well, you know, essentially this is the neckline, this is the retest, and this is what is going to happen, right? That's essentially what you're going to hear, not only on the transportational average, but if I leg it back into the Russell 2000, you're going to hear, of course, the same or at least similar conversations. You can see these prints, whether or not you want to take it around 1,450, or if you want to bring it down closer to 1,400, just slightly above it. These are going to be the technical areas that a lot of people are going to sort of hang their hat on and speculate that we are going to see a bounce and a reversal off from this area. I beg to differ at the moment. I still believe this market has got room to run, and the reason I say that is because the trend is still in effect. I mean, as hard as it is to believe after the correction that we have been through, this trend at the moment, and the macro trend since 2009, is still intact. As long as we remain above these swing lows, basing off from those decelerating fan lines, whether it's the third or the fourth, depending on which market you're looking at, the market is still structurally sound. And really what we've done is we've just flushed out, again, a lot of this overbought, overextended nature that we've seen on the daily and also the weekly time frame. Yes, technically we are getting across on the monthly. We've seen it in the past as well. And yes, we do have a little bit of divergence, but until this area breaks, all right, until we actually break below that decelerating fan line, technically speaking, you have to believe that the trend is still in effect. Now, if I switch into the S&P 500 again, what I'll do, I'll begin on the monthly chart so you can really get this in perspective. Back to 2009, we've had 1 touch, 2 touches, 3 touches, almost a 4th, a 5th over here, and now we've got a 6th. And if you really look at the December candle for the S&P 500, you can really see a nice long lower wick. Once again, I've really tried to color coordinate this and make this stand out as much as possible. Really, long story short, as long as we remain above this extension, all right, this purple colored line on my screen, the market's technically speaking is still healthy. So you can see that we've got that intra-session reversal. That was more or less, the day after Christmas. And although we are very early on in the period of January, as long as we don't break below that lower wick, really that's the line in the sand for this market. Also, obviously, the trend line. You have to believe that naturally these oscillators, which I'm flicking into at the moment, are going to continue to propel the market higher over time. This is the daily time frame. We're starting again to see the cross on the MACD. If I go into the weekly chart, although we're not as defined yet, you can see certainly we're recalibrating of the the oversold area on the RSI. The stochastics also is pushing back into oversold, and it's starting to flick up. So you can really start to see a little bit of a theme or a similar story between the markets talking, or at least referencing one another off from these sort of critical support areas. Now, the two outliers again at the moment the industrial average and that of the NASDAQ as well. Because when you go out to the monthly chart, I just wanted to show you this, and this should really act as sort of comfort for you. When you're looking at these decelerating fan lines, you've got the NASDAQ and also the industrial average that haven't sold off all the way back on into their macro chart. In fact, they've stopped sort of and lingered more so around this third decelerating fan line. So you've got the third area of protection. You also have this fourth, which is sitting in here at about 20,500, okay, give or take. So we're still, technically speaking, maybe as much as 3,000 points above where that fourth decelerating macro primary trend line is. So when you're talking about a safety net or a blanket on the market, technically this is true. I know it's a lot of points, and I'm not calling for the Dow to actually crack and move all the way down to say, 20,500 or 21,000 or even slightly below 20,000. All I'm suggesting at the moment is that technically speaking, if we did, we would still technically be in that of a bullish uptrend, okay? But again, if I bring up these oscillators after the sell-off, you can see obviously people are going to gravitate around some form of a neckline here. I understand it. Most likely what will happen is we're going to pull on back down a little bit lower. We'll get a bounce and we'll pull on back down lower. But at the same time, we'll be making a series of high lows on sort of a minor level fractal. But overall, we'll start to push above these declining exponential moving averages, which I'm going to show you at the moment. So you can see we're sort of contending at the moment with that declining 10. Who knows? Expect volatility to linger. I'd say that the probability or the odds are that we are going to see, unfortunately, a little bit of a sell-off back down to somewhere in between one of these two long-day white Morobozu candlesticks prior to seeing, again, that next wave of the bid or the buying pressure flow back into the market. But again, volatility should remain, relatively speaking, historically elevated for the foreseeable future until we do definitively print that of a bottom. And once that sets up, you should see these markets, again, collectively rise. MACD turning back up, RSI pushing out of oversold, stochastics crossing up. If we go to the weekly chart as well, after this 3-month correction that we have corrected back on into the third decelerating fan line of the industrial average, what's happening? They're starting to push into oversold, and generally we don't stay down here all that long. So going back into the discussion we had probably a month ago now, we were talking about how a lot of people are going to gravitate to what appears to be the break of the neckline, and then you should see a relatively quick sort of reversal, which will, in retrospect, really highlight that of a whipsaw reversal. It's somewhat playing out like that at the moment. Again, it's early days, but I think we're pretty much spot on the money here. The only thing that we've misjudged, you could say, is the severity of the sell-off and also the time frame of it. We were quick to go short up here at 26,182. We're very cautious with some of the ADX and the CCI, the Commodity Channel Index indicators, along with the market being relatively stagnant and seeing just a complete breakdown in the Russell and the transportational average, which led us to really focus on the Qs and also the SPYs, more so into these green areas of support. Obviously, it's overshot it, which has come as a little bit of a surprise, but at the same time, we still really haven't done any major technical damage, which I'm hoping at least to put any fears or concerns of yours at bay for the time being, or at least, just to calm collectively maybe some negative thoughts that are sort of creeping into your mind. That's a relatively dangerous position to be in. It's always good to be aware, to be conscious of, well, what if something happens? But at the same time, it's very important that you don't let those negative emotions drive you when it comes to opportunities potentially on that bounce moving forward. All right, so that's the industrial average. And also on the NASDAQ too, you can see this is the purple line extension on my screen. It's best to show you this on the monthly time frame. It's a little ugly chart, I must admit. Just the reason why is because it's gone so far. But you can see again these 3 decelerating fan lines, a long way away from that third decelerating fan line. In fact, if I zoom in on, you can see on the monthly chart, we still have a long way to go, technically speaking. However, I don't believe the NASDAQ is going to get all the way back down, not until later in 2019. And really what may just happen is that once we sort of build traction, we may overshoot, and I still am expecting the market to overshoot these little swing highs that we saw towards her in the final quarter, really, of 2018. But depending on what happens next, and depending on whether or not this market really has room to run, we may just somewhat sort of stagnate up here. And essentially what will happen is that we'll just sort of wait until we get closer and closer and closer to this macro bullish trend line. But as soon as we break this, that is when you have to go hard short. But I'm hoping, of course, to actually, time the reversal when it does set up. However, for the time being, still expecting this market to continue a little bit higher further into 2019 as well. If you have any questions at all, please email me, success@pivotpoint-trading.com. I hope you enjoyed your New Year's, everybody. There's not going to be an individual stock update in this particular video. But again, I'd encourage you to touch base with me and, share your thoughts on the market as well. All right, so on that note, everyone, I will be back with you later in the week. Welcome back again to these market updates, which I am going to routinely do for you throughout 2019, I do believe it is going to be a very sort of important sort of time for the market, maybe some form of a terminal phase towards the back end of 2019. So for those who are paying attention and see the signals, when they are definitive and legitimate signals, there's going to be tremendous opportunity both directions, but for the time being, it does look as though it is going to be more so on the upside. All right, even in the face of all of this sort of negativity out there with people addressing the markets. All right, so on that note, everyone, I'll say farewell to you, and I'll see you a little bit later in the week, if not over the weekend, in that pro analysis class. All the best, everyone. Farewell.